Hello, mic check, mic check. Okay, mic check. Let's start. If you are thinking about buying penny stocks, stop right now. Because I'm about to show you something that will either make you a lot of money or save you from losing everything. There are 5 biotech penny stocks under $5 that everyone's talking about right now. 4 of them are trap. One could actually 10 times. And the crazy part, the safest looking one is the most dangerous. So in this video, you'll know exactly which is which. So let's go. Welcome back to the channel. We talk about real money strategies. Now, penny stocks are like casino gambling, wearing a business suit. They look legitimate, but they can rob you just as quickly. Now, the biotech sector is absolutely exploding right now. We are talking about companies working on cancer treatment, gene therapy, and disease that affect millions of people. The upside? Astronomical. But the downside? These companies can go to zero faster than you can say FDA rejection. Let's dive into the 5 stocks. First up, we've got Gevo. Now, technically, Gevo isn't pure biotech. They are in the sustainable aviation fuel game. Gevo converts renewable energy and carbon into sustainable fuels. Think jet fuels made from corn. Sounds mental, doesn't it? But airlines are desperate for green solution because governments are forcing them to cut emission. So the good, they are got partnership with major airlines. Government incentives for green energy continue. The technology actually work. This isn't vaporware. Recent trading activities show investors' interest. But the bad, they are hemorrhaging cash. We are talking losses of $150 plus million. Production scaling is taking forever. High competition in the sustainable fuel space. If government subsidies dry up, so does their business model? Here's the thing about Gevo. They are playing the long game. If you buy this, you are betting that in 5 to 10 years, that's not a bad bet, but it's not a quick flip. This what I call a political stock. Your return depends more on government policy than actually business performance. Personally, I'd rather invest in companies that make money regardless of who's in office. Now this is where it gets interesting. AbCellera became famous during COVID-19 because they helped develop one of the antibody treatments. They are the guy who find antibodies faster than anyone else. They use AI and robotics to discover antibodies that can treat disease. Imagine a factory that churns out potential cures at lightning speed. That's AbCellera. So the good, recent stock movement showing volatility. Strong cash position, they are not going bankrupt tomorrow. Recent uptick in institutional buying. The bad, revenue has dropped 90% since COVID ended. They are burning through cash faster than anticipated. Stock is down 85% from its all-time high. No major new drug breakthrough announced recently. Here's what nobody tells you about biotech companies. They live and die by their pipeline. AbCellera had one massive hit with COVID. The question is, can do it again? I like companies that have proven that can execute. AbCellera did that with COVID, but, and this is a big but, they are essentially starting over. You are betting on their technology, not their current business. High risk, potentially high reward. If we see another pandemic or major disease outbreak, AbCellera will 10x overnight. But are you willing to wait for a global health crisis? That's the gamble. Adaptive Biotechnology is doing something absolutely mental. They are mapping the human immune system, every single immune response your body has ever had. They use immune system data to diagnose and treat disease, particularly cancer. The technology can detect cancer earlier than traditional methods and help design personalized treatments. The good. Partnership with Genentech, owned by Roche, another pharmaceutical giant. Their minimal residual disease (MRD) test gaining every traction, addressing a massive market. Early cancer detection is worth billions, actually generating revenue, unlike pure research companies. Recent positive data from clinical trials. The bad, still losing money hand over fist. Slow adaptation of their technology by hospitals. Competition from bigger players with deeper pockets. Risk of Nasdaq delisting if stock stay low. Here's the brutal truth. Adaptive has the technology. The science is solid, but in biotech, having great technology means nothing if you can't commercialize it. And commercialization in healthcare that takes year and cost millions. This is the stock I am most conflicted about. The technology could genuinely save lives and make investors rich, but they're in a race against their bank account. Can they get widespread adoption before they run out of money? There's a multi-million dollar question. If you believe in personalized medicine and early cancer detection, then adaptive is a bet on the future. Hold on. I said under $5 and Inhibrx is trading around $28. What gives? Here's the interesting bet. After their recent acquisition deal, the stock has been volatile as hell. Some days it's about $30, other day it crashes below $20. It's technically outside our criteria, but I am including it because it's that interesting. Basically, they redesign proteins to attack cancer cells. The situation. They recently got acquired, creating massive volatility. Their lead cancer drug is in late stage trials. So, the good, strong clinical trial results, multiply drugs in the pipeline, experienced management team. But the bad, way more expensive than other stock on this list. Acquisitions uncertainty creates risk. If trials fail, stock crash hard. I threw this one in to make a point. Sometimes the safest penny stock is the one that's not cheapest. Inhibrx has more substance than the other, but you are paying a premium for that safety. Is it worth it? Depends on your risk tolerance. Let's talk about Sorrento. This is what I call a graveyard stock. It's already dead, but some people think they can restructure it. What they do: pain management and cancer treatments. They had multiple drugs in development, but the nightmare filed for bankruptcy in 2024. Stock has crashed 99% from high. Delisted from Nasdaq, legal issues and failed trials. Why am I even monitoring this? Because this is what happens to most penny stocks. For every winner, there are 10 Sorrentos. Great press release and then nothing. Never, and I mean never, fall in love with a penny stock. Sorrento had believers who wrote it all the way to zero because they refused to admit they were wrong. Before my rankings, here's something more valuable: how to research these yourself so you are not dependent on YouTube videos. By the time you watch this, price change, news drops, but if you know how to research, you are always ahead. Before you buy any penny stock, run it through these 5 filters. If it fails even one, walk away, no exception. Open their latest financial report. It's free on SEC website or Yahoo Finance. Look for two numbers: cash on hand, you can found in balance sheet, and second, quarterly burn rate, like how much they lost each quarter. And second, multiply by 3 to get months. Example, if they have $50 million cash and burn $10 million per quarter, so $50 million divided by $10 million is equal 5 quarters. If they has less than 12 months of cash, don't touch it. They'll either dilute shareholders or go bankrupt. This one check would have saved people from Sorrento. Go to sec.gov and search for Form 4. So red flag, executives selling large amount. And second, no insider buying in 12 plus months, even they won't invest. Here is a green flag. CEOs buying with their own money. And second, multiply executive buying. Why would you invest your money if the people running the company won't invest theirs? For biotech specifically, go to clinicaltrials.gov. Search for the company name. How many drugs in phase 2 or phase 3 trials? Phase 1 is too quickly. When are results expected? What's the market size for the disease they are treating? You can find this on Yahoo Finance, MarketWatch, or any stock screener. 1 year ago, 100 million shares. Today, 150 million shares. That's 50% dilution, your ownership cut in half. Do a Google News search for the company name. So the question to ask, are articles from reputable source or just penny stocks pump sites? Is there actually news or just press release about potential? What are analysts saying? Reddit, Twitter sentiment. Are people excited for real reason or just moon talk? If the only news you find in from sites like penny stocks, explosion.com or nextbigwinner.net, run. Those are paid promotion designed to dump share on you. Bookmark these sites. If I had to rank this,